Welcome, everyone. Thank you for joining us. We're Formation Metals. We're a gold company in Quebec in the heart of the Abitibi. We are what I think is going to be one of the last undiscovered deposits in this area. It's such a prolific um, belt, over 200 million ounces of gold produced. This is an area that has been actively worked for over 100 years. And we're fortunate because we were able to find a project which had been underlooked for a long time. It's a project that was worked on by Agnico. It's a project that worked on by Cyprus, really, really big companies, great pedigrees, but they had a different vision in mind for the project than we do. They were very focused on finding higher grade zones. This was a time when gold was trading at $200, $600, $1,000. It's a lot different in the world today. At $5,000 gold, all of a sudden, a lot of projects become more exciting. This project in particular, I think, is one that we can see a path to discovery, a path to development, and a path to production. Going back a little bit. So my background, I'm a geologist. I've been in the capital markets for almost 15 years. My family runs a merchant bank. Really teaches you how to run and build companies. And that's really what I'm excited about here, right? When I talk about the company and its potential, I see how we can be taken out by a company like Agnico, a company like Eldorado you see in the space. We're pairing that with really big expertise on our side, right? Our team and our sister companies, we're going to be drilling over 100,000 meters here in Quebec. That's our specialty. And that's really how we came across this project. So this is an asset that, has 900,000 ounces already historical, mind you, but 900,000 ounces at a $200 pit shell. And so really, we saw this project as a call option on gold. Obviously the move in gold has been spectacular over the last year, which is, I mean, a lot of gold juniors very exciting, and how do you stand out? Well, I think how you stand out is simply, how do we take this to the next level, right? For us, it's all about, jurisdiction, all about permitting, First Nations, project itself, but those things are so key and important, right? Access to capital, making sure the management team understands how to advance an asset. There's so many great projects that are stranded because they're missing one of those boxes. But I really feel, and I hope everyone will see here, we check off all those boxes here, right? So look, the project is the most important thing. We think we've got a 3 to 5 million ounce deposit on our hands. That's our target. It's really just check the boxes here. We'll see here in the slides coming that there's 6 zones. This is not a project with 6 zones, right? This is historically identified, with the work done as having 6 separate zones because that's where they have higher grade cores. This is really just one broad bulk tonnage zone that runs for 8 kilometers with 2 sister targets to the south, with higher grade, obviously zones. Is the underground resource, which is really the same zone as just at depth. But to us, we see 35 million ounce, and that's just in the northern corridor, right? We see a company that can take an asset into production. There's a mill to the north, 20 kilometers away. There's a mill to the south, 60 kilometers away. This is a project that's had historical work done. There's not refractory ore here. Again, check, check, check. Jurisdiction, Quebec. Quebec is fantastic. This is an area in the Abitibi, as I said, over 200 million ounces have been produced in operation over 100 years. Part of our story took longer to develop because we worked hard with the local authorities, with the First Nations to really, make sure that we were doing it the right way. So once we got started, we wouldn't stop. And so right now we have 2 rigs going because, we've been able to raise the capital to do that, get the permits we need to just drill, baby, drill, right? So, our company has 94 million shares outstanding, market cap of about 40 million with just over 12 million cash today. And so that puts us an EV of about $25 US an ounce, which is very cheap. You look at our peers in the space, companies like Sitka are sitting at north of 350 million market cap, bulk tonnage deposits, very similar style. Obviously further along ahead of us on the curve, but this is where you can see, where are we going if we continue to execute, right? Companies like Maple Gold Mines to the west, 20 kilometers away, Douay, Qtel, 3 million ounces. they're trading at closer to $60 an ounce, right? And so you can see the value disconnect. When I talk to people about the company, in my view, whether you're buying it at 35, 45, 55, 65, I see a company that's undervalued because once we close that valuation gap to, 60, 80, $100 an ounce, which is what I think you can see projects go for in the Abitibi, especially where we are located. That tells you that this company has a lot of runway in terms of its growth coming up. So management owns about 2/3 of the company. I say management, I should say include our strategics. We had somebody come in the last financing, anchor shareholders who've, continuously participated pro rata. And so this is a pretty tight story for something that has just under 100 million shares outstanding. And I think you see that as we've started put out assays in the last few weeks. So I said, so we're in the Abitibi, we're in the northeastern part of the Abitibi, and this is unique. Our deposit is unique. So typically what you find in this area is deposits are much deeper, which is why it's very underexplored, right? So Dewey starts about 200, 250 meters vertical, to the north in Matagami, that old Glencore project, same idea. To the east, there's a deposit 250 meters. But we're unique in that we have really no overburden in the northern part of our property. We have 4 to 15 meters of overburden in that northern corridor. And that puts us in a position where you can see how this would become very quickly an open pit mine. So this is just showing the location here. No issues with permitting. How can we say that very confidently? Well, there's a mine that was next door to us. Tibet's a mine. It was an underground mine, literally 10, the head frame was 10 kilometers from our deposit. It's adjacent to us. And they were producing as recently as 2019. And so when we look at this project, we realized, look, bulk tonnage targets, which make no sense when you're trading at, or gold's, $1,000, $1,200 an ounce, but at $5,000 gold, this looks like a mine. At $4,000 gold, this looks like a mine. $3,000 gold looks like a mine, and then again, you look at where we're located, you realize when you eliminate that jurisdictional risk, it's a big check for the project. And the pedigree in the project, as I said, Agnico Eagle, Wallbridge Mining. We're not talking about something that's been worked on by smaller companies. This has had over 55,000 meters drilled historically to put together that resource. And again, that's really what we saw here. And the cool thing about this project is there's just gold everywhere. So as I said earlier, there are 6 historical zones in the project, right? They call it the A zone, the East zone, the RJ East, Central, but really it's just one broad zone, right? And what would happen is they would go find a 80, 90 gram meter hole, which is a spectacular hole. And they would follow that up with 10 to 20 meters of gram plus material, which isn't very exciting when gold's trading at, as I said, $400 an ounce, $800 an ounce, right? You're not running around screaming, look at what we've got at those gold prices. But what you see here, and every one of these holes is consistently, it's just lots and lots of gold over and over and over again. But it's all gram and a half, 2 grams, and so you see these guys historically working on pockets, right? Higher grade zones within what's going to be one very broad, gold zone, and it's pretty clear as day, right? When you look at this, you see here on the mag, it's just the pink here actually. You see here is this. This runs parallel to the deformation zone. It's just straight east-west, dips to the south, and it's very consistent. And it's not a complicated, project. I think, you look at geology sometimes and people go, there's too many rock types or there's too many, different kind of mineralization, alteration, what have you. We don't have any of those issues here. This is a project that is very well understood. But for us, it's all about connecting the dots, right? Because what we see here is one broad zone, open to the west, right? And here you look and see there's gold holes to the west, open to the east, right? Big gaps for us. The funny thing about this project is, I've gone into many arguments with our geologists. Obviously you want to call things a discovery when you're drilling them, but the point they keep making here is this project has had over 5 kilometers of strike drilled, where they just keep finding gold. And so, you're drilling these, I call them, they're obviously they're infill because everything on this project is infill, but I call them outfill holes because these holes are adding ounces to the resource. Our goal here is to drill 30,000 meters this year. We're fully funded to do that. We drilled 4,000 meters in late 25. Assays have started rolling out 2 weeks ago. And again, we're seeing very much. It's funny, the market's a bit surprised, but we're not. We're seeing 30 meters of 2 grams. 60 meters of a gram, and so we're fully funded for 30,000 meters, trying to deliver a resource here in Q3, and I'm trying to, it's a difficult thing to explain sometimes because the market hates the word infill, yet that's the beauty of this project. Every single hole really on this project ends up being considered infill. Why? Because it's within gold holes. And that's really a big advantage for us. It's a big advantage for our investors because that means we've largely de-risked what we're looking for. It makes it much easier than if you were to go out and step out into a new project, handful of holes. Yes, you can call it discovery, but I would much rather come out to the market and say, look, we've got 3 to 5 million ounces here based on straightforward calculations, right? That is kind of our goal. And that's really what the drilling's been showing, right? And so, as I say, there's 3 deformation zones, but the main zone is in the north. It's the Casperarty. And it's just, in our view, it's just one giant gold zone, right? And this RJ zone here is really just an extension to that, at depth at south. It's what you see consistently with the Vetsa mine to the west. Historically, it's called the Vetsa East. And so this project, again, is just very simple. Gold everywhere, big bulk tonnage target, with really the blue sky being very little work done here to the south in the central and the southeast, right? These are targets which should have been followed up on. They would drill, again, 10, 20 meters of a gram and a half, but a lot of interest at, $400 gold. But if you were out looking at a bulk tonnage target and seeing what we see with the geology, and you see 15 meters of a gram, that's something that you really got to start following up on because you can start building a bigger and bigger story here. And that's really the blue sky. If we think we've got 3 to 5 million ounces in the north, we could have another 3 million ounces in the south, right? It looks the same as from a geological perspective. They've done historical work there to show that there's gold there. It's just very underexplored. So the A zone is the heart of our deposit. It's the biggest focus for us. It's the lowest hanging fruit, and it's just spectacular, right? 84% of holes came back bearing gold, right? You think about that. 84% of the holes came back bearing gold. There's just gold everywhere. And probably more significantly, the gold was found quite shallow, right? So our deposit, as I said, unique in the area, very little overburden. We have about 4 to 5 meters in the northern part of the overburden here. Our deposit's largely within the first 200 meters vertical. That's not to say it's not open at depth, but this is exactly what you're looking for in a project where you're seeing very shallow, very open pitable gold, great metallurgy, and we got to connect the dots. And if you look here, what you see is there's gold to the west, right? This is further to the east, those east zones, right? Great continuity. And this is only 1.5 kilometers here, right? Even within this, we have room to grow. There's gaps in the model here. And so, as I say, we're doing a lot of outfill drilling, adding a lot of ounces to the resource from really what's low hanging fruit. But that's how we're going to get to 3 million ounces. It's just consistently drilling what we know. It's almost like drilling what's there. So the RJ zone is the other component of this project. It's the underground. It's the sizzle. Often I talk about boring sexy and sexy sexy. So the boring sexy, to me, I love it. I love the A zone, right? As a geologist, what I see here is, geology is not predictable, but I see us being able to consistently deliver gold over and over and over again along strike. When I see skinny veins, which are flashier and obviously more exciting, what scares me is you have projects like Newfound Gold, where they've drilled 750,000 meters and they've essentially delivered the same resource that we have historically, right? And you put that in perspective, you've got 55,000 meters, 750,000 meters. It's a lot easier to mine 30 to 60 meters of something than a meter of something, and that's what you see often over and over again in this area, right? Especially in Red Lake, some very notable examples where people like Eric Sprott have lost $100 million because they go try to mine the gold and the gold's not there, right? And that's a challenge when you're doing these sexier zones. I love this. Obviously, the core looks great. When you're finding VG, people get excited. This is what historically they were chasing after, where they're looking for these higher grade pockets. But what I care about is this. Like, to me, this is the core that we're focused on, right? Because we're sitting here after 55,000 meters, understanding exactly what the target mineralization is. We're looking at, it's very well understood, and we're looking at the core coming out of the ground, and this isn't as flashy as VG, but this is what's delivering those really wonderful bulk tonnage intercepts, right? So we're seeing, so that's just under 31 meters of 1.75 grams, 42 meters of a gram, and we're seeing this followed up again with similarly 61 meters of a gram down dip, 20 meters of a gram and a half. And that's really what you want here, right? I think end of the day, the goal is to consistently deliver bulk tonnage gold, continuously. And if we can do that over 8 kilometers of strike, that's how this project becomes a 5 million ounce deposit, right? And that's really what's been important over the last two releases, right? We just start putting out assays. We have 20 holes still in the lab to come. We're not going to stop drilling. As I said, we're fully funded for 30,000 meters. But the real story here is that we went out, the biggest risk of the project was, hey, is the gold there? Is the continuity there? And we've been able to show that it is, right? And this is, it's a bit of a simple diagram, but it's exactly what this project is. It's just a very thick, broad, mineralized gold zone where you're seeing gold start really at surface, and it just continues on to depth, right? And so what's more important here as well is we're seeing gold in what would be considered the waste rock in the north, right? Or sorry, I should say higher up. Because normally, you do an open pit and you're seeing, a lot of dead rock and your strip gets affected. But if we're going to be able to deliver 20 to 30 meters of even 0.8 gram material, well, look at in this market right now, if you have gram plus material, that's fantastic. If your cutoff is, quarter, fantastic. Mining widths 2.5 meters, fantastic. This is going to be much better. This is going to be a much better deposit as we keep doing the work and growing it, right? And we keep finding more and more gold. And end of the day, look, with 20 more holes to come, another 26,000 meters to release this year, I'm pretty confident that we're going to be able to go out and really show everybody that this is a broad single zone that can deliver that 3 to 5 plus million ounce gold. And then you start looking at what does the future look like for a project like this. And I think, look, there's a toll mill to the north 20 kilometers away, New Vow Minerals. We're already in discussions with those guys. We've talked to them. Obviously it doesn't mean much, but there's an opportunity there 2 years down the road when we're much more developed company. There's a conversation to be had. There's toll mills to the southwest at Sleeping Giant. And you realize that your focus is, let's just get this to 3+ million ounces, because the value of 3+ million ounces in the Abitibi is a heck of a lot more than $25 an ounce where we are trading at today. Again, that's where the opportunity lies, right? And so we're going to really focus here and grow this along strike in the northern corridor. But we're also going to spend some time and effort trying to expand this in the central zone, the southeast zone, because that's the blue sky, right? If there's blue sky here in the north delivering 3+ million ounces, 5 million ounces, well, that area is where we can get this thing, we start pushing that envelope and add another 3 million ounces. It looks the same. It's been a lot of work done, but again, boring results, right? And boring is good though, right? Because for what we're wanting to accomplish here, boring is great. I'm more excited about delivering 30 meters of a gram and a half than I am about delivering 50 grams over a meter. And I think that's really, to me, the story, right? If you want to see a project develop in probably the best jurisdiction in Canada with no issues with permitting, First Nations, this is the kind of project you want. This is the kind of project you want to invest in, and that's where we're at, right? And so to summarize, just under 900,000 ounces of gold, 6 zones, but those are 6 really higher grade zones within what we think is one broad zone. Only 35% of the strike has been drilled. We have over 15 kilometers of strike on this project to drill. Our focus, though, is on the northern corridor. Really, there's 6.5 kilometers of low-hanging fruit in our view. Look, if we can go out and duplicate even, as I said, historically drilling 84% hit rate on the gold. Well, if we can go out and hit, 75%, look, all we want to do is consistently deliver 30 plus meters of a gram plus material. And that's what we've been doing in the last releases. We're really well funded. People, I think, one of the things we've been very grateful for over the last year has been people have recognized that this is a quality project and have given us the access to capital we need. And, the funny thing is now with the results coming out, we're in a position where I'm pretty confident if I wanted to, I could raise another 20 million tomorrow, right? Proof is in the pudding, right? So we raised 17 million last year based on a concept. It was interesting to see too as we grow the company because we started off, with a 2,000 meter program, then a 5,000 meter program, then 10,000 meters, then 20. And as the money, from very, I would say, quality capital started coming in, realized that we're an opportunity here to start taking some real shots to grow this. And, with the assays coming in to support our thesis, now we're in a position to pretty much raise at will, right? And which puts us in a great position, right? I think most companies have, these things need capital. It takes a lot of drilling to develop these things to a point where, you get a major one to step in, but we have the ability to do the work this year and raise the money we need to, right? And I would like to, in an ideal world, 60,000 meters this year. That's my goal, right? I don't want to stop drilling. We want to finish the 30,000 before the end of the second quarter. We want to start, we've already started working on the resource. We want to deliver that in Q3. And we're drilling at 30,000 meters on top, right? The more aggressively we drill, the quicker we get to that target, right? The better we understand this resource, the better we understand this project. And that would put us in a position, we'll be by end of Q2, we'll have 85,000 meters drilled on this project. My goal is end of the year, 115,000 meters drilled on this project. And really, that's how we're going to start catching up to that disconnect between us and the Maple Gold mines and, the Sitka Gold and the Mayfair Gold, right? Because we're trading here at 40 million market cap with 12 million cash. These guys are trading 10 times our market cap. Obviously, they've excelled as operators. They've done a wonderful job. Sitka came out with a resource today. You need to continue to excel. But, we can do that. Why? Because we've got the right team behind this, right? We have over 100 years of experience. We've raised over $100 million in the last 3 years across our group. Our VPX, Louis Garapi, is part of Abitibi Metals, our sister company. He's ex-Cisco. He's, I don't take any offense when I say he's a better geologist than I am. When he has a vision, I support it, right? He's the guy to be leading the charge, not me. And I think that's really what it's going to take. And you put it all together and, we're cheap. We have a lot of upside. We're funded. And I can see how we grow into, a much larger cap as we continue to execute.
Well, Deepak, that was such an amazing presentation. I cannot begin to thank you enough. We have a couple questions that have come in that we're going to flip over to here. And the first one is, what do you think is the value of the reserves not yet reflected in the share price?
Yeah, I mean, look, okay, so that's a tough one to quantify, obviously, and it's all forward looking and whatnot. But it, if we round it up to, because we're going to be speculative here, we round it up to 1,000,000 ounces just because, look, this was done at a $200 pit shell, right? You go 1,000,000 ounces and you start doing some math, right? And what's the value of 1,000,000 ounces of gold right now, right? And you want to use spot? I mean, end of the day, like we're very confident in, if there's one thing that we're very confident in right now, right, it's that the historic work that was done is going to hold up, right? And that's what we see with the drilling. I think there was a big risk, but there was definitely a risk where you go drill. And we're not doing any twinned holes on this project. I think that's something I kind of glossed over here. We're doing drilling, we're infilling within gaps, we're infilling outside of gaps, but within gold holes. Um, and really our job here is to, go validate that the historical work holds up. We will of course do some twins later on as part of the resource, but at a million ounces at $5,000 gold, where this kind of work has been done. I mean, that's what, $5 billion. And then cost of production in this area is around $1,200. So this thing should be worth a lot more.
Mhm.
You can't trade, obviously, you can't trade it with the value of the deposit is, but I look at it as what are these other companies in the area being taken out as,
Right.
right? So there's obviously a discount and companies being taken out at 60, $80 an ounce, $100 an ounce. And so my view on it is we should be worth a lot more than $25 an ounce, which is where we're at today.
Right. Of course. Okay. Next question. In a capital constrained market, how do you prioritize asset advancement versus treasury preservation without diluting long-term upside?
We started bringing in tier one investors in the last round, where they can go long term, and that's what we're going to keep bringing in as we move forward. So the stock stays essentially off market as we grow the company.
Perfect. Awesome. Well, Deepak, this has been such a great conversation. I can't wait to learn more and definitely keep in touch. Where can we find you? What's your website?
FormationMetalsInc.com, Twitter, social media, Facebook, LinkedIn. Call me at 778-899-1780. I still answer every investor call. Email me, dvarshney@FormationMetalsInc.com.
Perfect. Thank you so much. And we look forward to learning more.
Thank you.